Hello, it's Vian from Forex Trading, and today I'm having a look at the gold to silver ratio and the opportunity that's being put in right now. So, first we're going to have a look at some information that's being provided by Investopedia. It's kind of like a Wikipedia for trading and markets. Uh, it's actually a very good website. I'm pretty sure everything's free on here, so just put a link in the description so you can have a look for yourself. Um, but so yeah, you can read this entire page for yourself. I'm just going to go over the basics. So in the year 2007, the gold to silver ratio averaged at 51. So this average is actually quite important, and we'll talk about that later. And there's some other information, like some historical information about the gold to silver ratio, but we're going to skip over that for now. So the main strategy is a lot of people use this strategy, and all that you do is you sell at the high extremes and you buy at low extremes of the gold to silver ratio. So for example, if the ratio peaks near 100, then that's usually a good sell opportunity. Basically, this strategy works off the reversion to the mean principle, which is why it's pretty effective. So I actually just came across this chart as I was looking for some pairs to trade, and I noticed it was on my broker's list, Oanda, so I decided to pull up the chart and have a look. I noticed something quite interesting, which we'll go to now. Okay, so now this is the gold to silver ratio weekly chart, and as you can see, it peaked in 2016. That started 2016 to 80, just about 83.8. Now that's pretty high, considering the highest one before this was in 2008. And from there was a pretty sharp decline actually, all the way down to 30. So just this chart only actually goes back to 2006, but since then this is the chart. As you can see, there's no trend. This all range bound, which is what this chart's going to look like throughout history. So this is probably what I'm expecting now. But over time it's literally just going to go up and down. So that creates obviously good sell opportunities here and good buy opportunities down here. So obviously now we're at a good sell opportunity, and of course since I use Elliott wave analysis in my trading, I did some wave counting on it as well. So from the high we had 5 waves down, and then a complex triple combination correction, which basically acts as a B wave. So we'll have an A here, a B here, and a C here. So as you know, with C waves, they should travel past the end of wave A. Usually they actually equal wave A, meaning C should come down into this zone, which is about 59, just 0.8, just under 60. However, some important levels of for the C wave are 1.236 of wave A, sometimes 1.382 of wave A. Usually it doesn't extend past 1.618 of wave A. So we know the average in 2007 was 51, which is here, which lies within the wave C typical range, which is about in this box here. Of course it can truncate, but that's not so likely, and we like to look for high probability opportunities when we're trading. So this is the typical box that it should fall into, and since it's all the way up here, this can make a nice trade down. Now I want to do something which is quite interesting. If I count, I'm on the weekly chart again, so if I count how many bars it's been since April 2006, it says here 593 bars, 593 weeks. So this is quite handy because if I just apply a moving average of 593, it'll make a dot here. So if I just enlarge that, because you probably can't see that, make it black. So as you can see, it's made a black dot here. So from this entire chart here, from all the data since 2006 April, the average is 61. So that's higher than what it was in 2007, which was 51. So this is probably a good place to look for the reversion to also. Not only this box here, but also this 61, because that is the average from the recent data. Okay, so I've now just zoomed in onto the daily chart, so you can see just kind of how my count's structured. But it's basically in purple here. This 5 waves down, and then we've just had a correction up. Purple's the important one. So W, X, Y, X, and then a quite big Z wave. So I'm actually, this last bit's quite hard to count. It could be complete now, which would mean it reverses from here, but I kind of like the idea of another high around the 886 before the fall. The reason being is if I go to the 4-hour chart, this hasn't looked particularly impulsive down at all. So that could suggest it's still correcting. However, that kind of makes the count slightly different for the last bit. I don't know how to count it properly. So this could be a leading diagonal, as I've kind of marked here. Should be 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5, something like this. But that means either now or one more low, and then it should correct up into this area before falling. But I'm not so sure about that. However, you can have a look at this chart for yourself, put your own count on it. I kind of like the idea of it being done actually, and that this is just a slow impulse before a correction that we can sell into, or it might just start going down from here. But yeah, I think this is the count for now. It's looking pretty good, and I just want to go over to the silver chart now. Silver versus dollar. Now, obviously this is quite important because since that's the gold-silver ratio, we would expect silver to increase faster than gold. Silver's going to appreciate faster than gold, which would mean that silver is going to go up pretty harshly from here. I'm expecting gold to increase as well, so silver's going to have to increase quite a lot. It's going to have to appreciate quite a lot. I've put a count here on the weekly time frame. This chart doesn't have enough data, but I went on to a different chart that has data going back like a century or so. So basically there's 1, 2 here, and then it comes up to wave 3 here, and quite a sharp, steep wave 4 here, and then of course a big wave 5, as wave 5s often extend in commodities. Then from here we've basically, I haven't quite labelled this yet, it's just A, B, I think C here. That could sorry, that could actually complete this correction, or we could see it go lower. This could obviously be a W X Y X Z, or this could be a W here, sorry, and then an X up here somewhere, and then a YZ, which could either make this A, B, C, or some other more complex correction. However, obviously if wave C is in here, this would then just start impulsing quite strongly, and Senex, quite a good trader, has actually made a video just now on the DXY and an ultra bearish case for it. And I think if that is true, if that ultra bearish case does take place, we could actually possibly see it impulse from here. If not, if it's one of the other two views he goes over, it could either simply be just a ABC up, or one of the more complex corrections up. However, this does seem to be a low here until this high is broken. This ties in with the gold-silver ratio, because we should see a few months of appreciation, possibly up to a year, depending on how depending on if this is the second wave or the B wave or something like that, because this can be counted as 5 up here. So this is a good time for turnaround. Obviously, if I just show some Fibonacci relationships, this is just touched the 618 extension, and I think this is 786 retracement as well. Yeah, 786. So there's a good some confluence there, some Fibonacci confluence, which is obviously quite important in Elliott waves, which gives me further confidence that a low is in and that we should see the rise now. If I go to the daily chart here, so yeah, this is I don't know, this could be some kind of wedge pattern here, this going down. It does look like it could potentially break out now. It did put in quite a nice hammer or pin bar, whatever you want to call it here, but it looks like the upward momentum might burst through now, especially with the weak US dollar, which is absolutely melting at this point. We could see the rise happen now, which will then give good buying opportunities on silver. So if just going back to the gold silver ratio, if that does happen, there's probably some count here for 1, 2, 3, 4, 5, and then maybe a little bit higher possibly, and then if silver does break out of that wedge now, then we should see it go into wave 3, possibly wave 4, and then wave 5 is often large in commodities, as I've mentioned previously in the video. So that would mean that it takes this ratio down quite steeply. But yeah, this this is looking like a decent setup. I thought I thought I'd mention it because it is quite interesting, and I know there's a lot of gold traders out there and some silver traders that would like to see this, that might not have seen this yet. Please give me your opinion on this, and let me know what you think. We have a website. Let me just find it really quick. forextrading.co.uk. I'll be posting more analysis like this on here on our analysis page. I'm pretty sure, like, I think there's only been one trade that hasn't worked on here out of there's quite a few analysis posts on here. So because I usually put quite a lot of effort into these posts, especially on, if I go to this USD CAD one here, this was one of my best trades. I took it from ending diagonal right at the peak of when the USD CAD was started falling. If I just pull up the chart here, sorry, this is the wrong chart. Okay, so I can't remember, but I think it was right here actually. It was either here, yeah, I think it was here. Up at this zone here. Oh, sorry, no, hold on. Or maybe it was, I don't know. Yeah, no, okay, yeah, okay, fine, sorry. It was right here when I started analyzing this, and from here I called for the down move, and I had a look at the US dollar index and all that, and obviously from there this fell 1,000, almost 1,400 pips, which is quite significant. So a lot of these trades that are posted in this analysis page, I put a lot of effort into. Obviously, you can read them for yourself. If I just look at one more, Euro, Great British Pound. This is my old chart. Sorry. What you'll notice with my charts is that I like to go quite in depth with the Elliott wave counting. So as you can see here, if I drop down to the 1 hour, there's even more labels. It gets quite crazy, but that's the way I like to do it, and it works for me. But I think I can't remember. I think it was down here, which when I made this Euro Great British Pound post. Sorry, wait, I can't remember exactly where it was, but it was around this area, and I called for the buy, and obviously it's made quite a significant up move also. I haven't really been trading it recently because it's been quite crazy. I don't know how to look at it really. But yeah, make sure you go visit our website. Everything's actually free. We offer educational courses which are all free. We're releasing another one pretty soon, which will be this one, reading a chart. We've already got basic training and flag patterns out. These are all going to come out in the future. Everything's free at the moment. Planning to keep 99% of it free, possibly 1 or 2 things paid, but everything's free now. So yeah, go have a look, link in description, and yeah, so thank you for watching this video. If you have, like I said, if you have any comments, just make sure to leave them in the comment section, and I'll get back to you within a day, and goodbye.